Alright, yes guys, welcome back to the best channel on YouTube, the channel that makes you money, and a trade recap of the trade that we took today. I don't even know what to say anymore. 6 out of 6 trades in a row. Oh dear. I feel bad for these prop firms I do at this point. I'm applying for more accounts today. So as you guys know, I got banned from Apex and I decided to open up 20 fresh funded accounts in my family's name, which I did myself, and I got them funded, and then I took it today and made an extra $9,000. Oh dear. Right, guys, let's not get carried away. We take losses too, right? So the only thing that is important to your day-to-day thought process and execution of the trades and result, the only thing that matters at the end of the day, did you take the right trade? Not did you make money, not did you lose money. It's, okay, did you follow the model correctly? Determining your bias, sweeper liquidity, shift in structure, breaker, fair value gap, other confluences to price. Are you paying attention to actually taking the right trade, following the checklist, determining your bias correctly? That is number one. The money, the payouts, this is a byproduct. Now, through the course of the year, you are going to experience points when you make more that month than another month. You're going to experience a week when you have a losing week. You are going to experience a slower week than the other, or maybe even a period of 2-3 weeks when you think price action has died. Yes, it does go through periods where it tends to be slower than others, and you really cannot put a pin on it or when it's going to be a slow period. Let's break down this trade that I took today. Starting on the 1 minute time frame, I just want to go over the first day of macro onto why I did not take any trades in this first AM. So from 9:45 a.m. to 10:15 a.m. I've seen a few people take some trades. I don't know whether they made money or not, and I don't care. Now, between the first day and macro, there is no opportunities to take. You would not be taking shorts here because we have already swept London lows and Asia lows. So, marked out on NQ and ES, you can see that we have swept London lows, and you can also see very clearly that we have swept Asia lows as well. Now, I haven't marked that out the best, but we already know Asia lows and London lows has been swept. From that point, you would have already met the draw of your bearish bias trading out of these imbalances to the left. So shorts, as of this point, everyone already knows this is no go. There is no sweep of buy side. The most recent sweep was sell side, so you are missing off major key elements to the model, so no trade. In regards to a long here, you would actually have to have lost your mind to think that you was taking a long here. No shift in market structure, no breaker or mitigation block paired with any sort of gap on either NQ or ES, no shift on ES either, absolutely disgusting. Rank, no trades. So I think we have that down. Now, second day of macro, 10:45 a.m. You are monitoring price. You are not looking for shorts. You are in a deep discount. Think wisely. Now, let's take a look at price. 10:45, 11:15. We start, as you guys have watched me thousands of times, 15-minute time frame. You can even put it on the hourly if you want to be more broad with this and identify the correct days. Okay, so paying attention on the hourly time frame, just to mark out these levels outside of the 15-minute because they are very far apart. If we look on the hourly time frame, we do have a major point of sell side. Let's reference that over to ES as well, and we can mark this out as sell side liquidity. This is not a time-based low. This is not previous week low. This is just the point of sell side that we can look to mark out. So we've marked out that point of sell side. This is basically the only point of sell side we can reference, and now we need to mark out points of buy side. So let's take a look here. So we can reference this high to be a generic point of buy side, and then we already have that point of sell side referenced on ES. Now what do you guys notice? Bullish SMT on ES as NQ swept a low, ES didn't. Buy side liquidity marked out, done. Other points of buy side. Now I'm not going to reference this because price is over 300 points from the point of buy side I've just marked out here. So there's no point referencing other unrealistic points of buy side that we're not even going to draw to inside of this second AM macro. Okay, so we've marked out the key levels. We've had a sweep of higher time frame sell side. We have a bullish SMT on ES. You guys can already start to see where this is currently going. Now we are going to look on the daily time frame. As you can see, this current daily candle is still open. We're going to assume that this daily bullish gap is respected. So the daily is bullish. We're not in a bearish gap. We are bullish. 4-hour time frame. We are not in a bearish gap. And if I delete these current lines here, you can see we are currently trading out of a 4-hour bullish gap. So a daily bullish gap and a 4-hour bullish gap. So the daily is bullish, the 4-hour is bullish. The hourly, well, let's take a look. So on the hourly time frame, we are not in a bearish gap. Let's take a look to the left. So this gap previously got respected. So this is the entrance to the gap. And also this is the low of this hourly gap. So this is how I'm referencing entrance, exit. So initially what that means on the hourly time frame, we have a hourly bullish bias. We're trading out of this hourly bullish gap. So our bias is bullish. Let's get that down. So already we have 3 bullish results out of 5. Now you could look at the 15 and the 5, but I wouldn't because there's no point because we already have a 3 out of 5 already leaning towards a bullish bias. So with a sweep of major sell side, we are now in the second day of macro. The first day of macro presented absolutely nothing. And now let's monitor price. So let's fast forward price. Okay, so we are starting to see a shift in market structure. However, I am not convinced from this. I'll tell you why. Price upon this fair value gap here, there is no displacement. Yes, we do have a mitigation block paired with the gap. However, price displaced upon this candle did not give an entry off this gap. So there is no entry. I am looking for a further market structure shift above this high, and we have to reference that we do have a bearish order block as of this point, so an inverse of that would create a bullish breaker, so paired with a gap, etc. These are points that you want to label out on your chart as it's going to reference more of an idea on where price is going to be heading. Okay, boom, shift in market structure on both NQ and ES, an inverse of the order block, therefore it's now a bullish breaker, and it is indeed paired with this fair value gap. So the point that I was looking for here and getting ready to take a long position for a retracement back into this fair value gap, I was looking at this and a stop placement of 27 handles for a 2-to-1 risk to reward, which I get a 2-to-1 at this point of buy side liquidity here. So let's mark this out on both NQ and ES, a point of minor buy side. Okay, so let's see if we get an entry. Okay, no entry for price. So we have a breakaway gap as price closed above the previous short-term high. We have a bullish order block just resting below the fair value gap. This is my point of entry here, which you can see. The bullish breaker is on a fair value gap for the trade upon the displacement. I took first presented gap. We have a bullish order block resting below to support the fair value gap as well. Let's mark this out. My entry was in around my stop placement at the swing low for a 14.5 handle stop placement, and then I'm just looking for a 2-to-1 towards that point of buy side liquidity, which we are getting there absolutely perfectly. So that is our entry. This is my stop placement, which you can see there, and this is my TP. So now let's fast forward price and see how this trade plays out. And boom, just like that, price runs straight to TP. I actually closed out prematurely, and you can see on this candle here, if you reference over to ES, there is now a bearish SMT on NQ. I prematurely closed out for a 20.25 handle gain, which is a 1.4 risk to reward. So risking 300 per 50k account, that would be a result of 1.4 times 300, which should give you a result of around $450 or around $400 as a result per account. So I got a result of $450 myself per Apex account, so that was $9,000 there. I caught this on FTMO, Alpha Futures, My Funded Futures, Take Profit Trader, Top Step account, FTMO and live account. Absolutely disgusting. I don't really know what to say, but after this video is done, I will be purchasing more accounts with different prop firms and testing them out, and then bringing them back to you guys to see if I can recommend any other prop firms so we can scale up to the absolute max. So guys, if you found this recap useful, then drop a like on this video, guys. Let's run this up absolutely to the max. We are destroying price at the moment, going absolutely insane. And subscribe to the channel if this is the first time you hear my voice. That's absolutely insane. Take a look at other videos on this channel. Very, very insightful. The only ICT trader in the space that drops value like this. You'll never see it anywhere else, I guarantee it, and I will place a bet on it. Comment on this video what you want to see in future videos, and any suggestions, just let me know. And I always look at all the comments that come through. Even though there is quite a lot, I always see them all. And until the next one, have a great rest of your evening, and I'll speak to you guys shortly. Take it easy.